And as pointed to India as one of the beneficiaries if the Trump administration should take over Venezuela's oil sector. U.S. intervention could help ease financial strain on India's state-run energy companies, enabling them to recover more than $500 million in unpaid dividends. Ishan Garg reports for CNA from New Delhi.
As President Donald Trump signals American companies will accelerate investment in Venezuela's oil sector, policymakers in New Delhi are watching closely. The question is whether U.S. intervention in the world's most oil-rich nation can help India's own energy stakes. State-owned ONGC Videsh holds a 40% stake in Venezuela's San Cristobal oil field, one of Latin America's most prolific oil reserves. But the investment has been crippled for over a decade. The company was reportedly owed close to $500 million in dividends starting in 2014, but Caracas failed to make payments, reportedly citing financial constraints. Then came a second blow. When the United States imposed sanctions on Venezuela in 2019, the country's oil production collapsed. For ONGC Videsh, its investments in San Cristobal looked shaky. Along with it, Indian state-owned consortium partners saw another project, Carabobo 1, grind to near standstill. With investments reportedly worth $2.2 billion stuck in limbo, analysts believe U.S. intervention could finally activate oil production and export from these projects.
So in the near term, would the sanctions be lifted? Would the production go up? Looks unlikely. But in the medium to long term, if that happens, and with the ownership or control coming into US, and given the kind of, the trade relations or the overall relations that India has with US, the possibility of then you actually getting your money back goes up.
New Delhi has so far not said anything officially apart from issuing this cautious statement. It called the developments concerning and urged peace and stability in the region. Yet the immediate impact on India's energy security remains uncertain. India imports nearly 88% of its crude oil, though its reliance on Venezuelan imports has dipped significantly in recent years. Any global oil market volatility could drive up costs across India's entire energy portfolio.
Definitely, if the crude oil prices go up, then the inflation goes up, and then you have your current account deficit that goes up. So the macro, to a certain extent, would get an implication. But the base question, therefore, is with the scenario, do you see the prices going up? At this point of time, the chance of that or the probability of that seems very, very low.
ONGC Videsh is reportedly now seeking a special license from the U.S. Treasury's Office of Foreign Assets Control to legally operate within Venezuela despite U.S. sanctions. If granted, it would effectively allow one of the world's largest oil importers direct access to the planet's most oil-rich reserves, a scenario that analysts say could reshape New Delhi's energy calculus. For CNA, I'm Ishan Garg in New Delhi.